Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, July 24th, 2009. Well, folks, it's Friday, about midday now, as the markets have come off their lows in a beautiful manner. Now, this has been an amazing day, and I want to discuss a little bit about it. We came off a huge, monstrous rally yesterday. Monstrous rally. You know, we've been on a monstrous rally to the upside, absolutely huge, and what you're seeing now is the markets actually should be down huge on the day based off of some of these earnings announcements, and they're really not. I mean, let's be honest, this market is very resilient. You had earnings from the likes of Microsoft, MSFT, down 10% on the day, all right? It is off the lows by about 50 cents, but still down $2.25 on the day. You have numbers coming out of Amazon that disappointed. That's down almost $8 on the day. You had some other earnings from American Express. That stock was negative by over a dollar, $1.50. It is now positive 6 cents. All right, you had earnings from Capital One. That stock gapped down, now up $2 almost on the day. So you're seeing here a monstrous recovery in the markets on a lot of these earnings. Now, still, the earnings were horrible. Microsoft's earnings were just absolutely out of this world in the negative direction. But the bottom line is, folks, is that this market is in this bullish mode right now, this bullish mindset, where literally you could see some horrible thing like, the top 50 stocks or whatever, the top stocks in the S&P could just evaporate and disappear, and this market would still go up. I mean, I'm just using that as an example to show you how much bullish sentiment there is out there right now, and how the markets, everything is positive. You know, I could, it's like a guy sitting in the hospital with his both legs cut off from surgery, and he's saying, "Oh, this is the greatest life ever. This is going to be great. I'm going to be able to just be catered to all the rest of my life." I mean, it's kind of like that mentality where you have that, where everything's a positive. Doesn't matter. You could tell me that a stock just was into the next Enron, and all of a sudden the markets go up even so. And that's kind of interesting to see, because bottom line is that's what this market is right now, and it's kind of comical in a way, but in another way it's kind of serious. I mean, you're talking about this market that has blinders on. You know, I wrote an article. Many of you guys can check it out. It's on the archives in the blog. You can look in the article archives. It's been posted all around. But basically the article was stating how companies are coming out here and beating estimates, but the earnings are missing, and the reason they're missing is because that there's no growth in demand. People aren't buying, so the earnings are coming in better because of cost cutting, and that's the bottom line. All right, so it's great. So companies beat on because they're cutting costs, but what happens when those cutting costs cease to exist? What happens when you can't cut any more fat off the company because it's running bare bones now? That's the worry for me down the line, further down the line, and obviously this is all stuff we really go into in depth in our research center and subscriber base, but all this kind of stuff is really important to understand, because there will be a point where there's no more cutting costs to cut. Now, has the market recovered? Because if it's recovered, maybe revenues can inch up a little and supplement it. What if they don't, though? What if this market with now almost 10% unemployment goes to 12, goes to 13, goes to 15, as ultimately I could see that happening, going as high as 13 to 15%, in which case we're in a lot of trouble, folks. So right now, the market's in one of its grooves. That's fantastic. You've had buy programs hitting today. Now, what is a buy program? Buy program is where you have a trading desk, a Goldman, or some of the other people. Just you press a button, it causes a massive buy across all the companies that are in the Dow or the S&P or so forth. So you see really mainly Exxon and Mobil and Goldman Sachs being the key catalyst there. But that's been happening today. That happens in light volume days. It's kind of cheating in my view, a little bit, because you're really not causing. It's not necessarily a real buy. You're more propping the markets up, which is again a little bit of a shady situation. But not surprising to see it today. Remember, today, folks, the key is you were looking at a major down day following a big up day. You would have had a reversal day in the markets, but obviously we're not going to get that right now unless we sell hard into the close, which I don't think we're going to do. Could we come down a little bit? Yeah, it's possible, but buy programs will always exist, folks. The light volume on a Friday in the summer, like it is today, is very enabling to certain propping techniques that are going on right now to make sure this market does not fall. Remember, a positive market, a big rally, a massive long-term rally since March. What is it doing? Why is it important that the markets are up? To the government, to the Treasury, to the Fed? Well, because you're basically trying to change the sentiment of the average person to go out and spend money. When their 401k has rebounded in a huge way, when they're thinking that they hear every day that the market went up again and again, guess what? They feel a lot more confident, and they're trying to reshape the mentality of the retailer or the retail investor here, or the small guy, to go out and start spending money. Now, that's nice and dandy if it actually is a recovery. If they're kind of lying to us in a way and we start to crash later on, then guess who gets caught with their pants down? Not the institutions, the little guy who they were trying to convince. And that's what really gets me in a huff when you start to see the little guy taking the brunt of the storm here, which they did on the down move. Trust me, it wasn't Goldman Sachs that was lagging there and getting hit on the downside. Goldman Sachs just reported great earnings, so trust me, it's not the institutional player that's going to get hit when the market drops or goes up. Those guys are ahead of the curve. It's the little guy that always gets in when it's at the top and jumps out at the bottom. So again, you can see right now, folks, just to discuss the trend line analysis here, you can see the market gap lower by a little bit. You had a little bit of a push, then a hard sell here, little bounce right off my trend line. Trend line worked beautifully today. Then you bounced up, you came back down, took out that trend line, went to this dotted line. In addition, you didn't confirm the move down below this beige trend line or this pinkish trend line right here. So you didn't confirm down. To see confirmation, you needed a secondary close below. You didn't get that. As soon as we didn't get that in the chat room, we said, guys, this market could get back above, and the rest is history here. The move up, beautiful move up, went right to the 50 moving average. That's good resistance. You also have a dotted minor resistance level right there, which coincided with the 97.50 level, and the markets have pulled back slightly off of that. But right now, this is bullish consolidation because of 1, 2, 3 inside bars on this last green candle, and you have to understand how your inside bars work. So that's right now how things are going here. Market very, very strong even though it's still slightly negative, considering the news out, folks. And I'm telling you, these earnings were probably the worst compilation of earnings I have seen in a long, long time. I don't know if you caught Broadcom getting crushed, even Rambus getting crushed, down 60 cents on Rambus, but Broadcom really getting hammered. Broadcom right now down $2.75. A lot of the tech stocks really got hammered, and that's why the Nasdaq overall is the one that's lagging the most. But for the most part, it's everything else has recovered. The financials are so resilient, folks, so resilient. Look at Goldman Sachs. I'll show you buy programs. Want to see buy programs? Look at Exxon. Market was at its lows, and all of a sudden, buy program hits Exxon. Look at the size of that candle. Look at the volume. The lightest volume candle of each of them around was this one. That was the buy program candle, which shows you when volume's light and they do a buy program, it really doesn't take that much money. I mean, when you're talking about an institution or a PPT, a plunge protection team, President's Working Group, whatever it may be, it doesn't really take a whole lot of volume and money to make the market spike up. Once you get Exxon to go, guess what else is going? Everything else around it is going to run, all right? That's just the bottom line. You're going to see that, absolutely, and we'll see the monster move there. All right, also you see Goldman Sachs. Goldman Sachs, when Exxon started, also Goldman Sachs did. Now look at Goldman Sachs just trending all the way up, beautifully making a move here and trading all the way back up sideways, only down 90 cents, was down over $2 earlier. Look at yesterday, same thing, was down slightly weak early on and then just went up the whole rest of the day, carried the markets with it, a little bit of pullback selling into the close, but anyway you cut it, this market is in a bull mode, absolute bull mode here. And the market's continuing. Look, just a minor pullback off this up move on the spiders on the 10-minute chart. You have to generally have a positive bias. We always claim this, and we always talk to our traders about it in the research center, in the chat room, is when there's no volume in this market on a Friday, you have to always have a light volume and positive bias, especially with the buy programs, the propping that goes on. Just the way it is now, folks. You just have to get used to it, trade it appropriately, and do your thing. All right, folks, that's all for today. We'll talk to you soon. Take care.